As we mentioned earlier in the show, the Federal Reserve Wednesday decided to keep the federal funds rate unchanged. The Fed previously forecast another interest rate hike, but falling inflation and a tightening labor market indicate the 11 previous rate hikes have done enough to restrict lending and make businesses more cautious without causing mass layoffs and business closures. Slowdown, though, is more pronounced in the tech sector, where, according to the New York Times, 3,200 startups have shut their doors this year. Here to explain what's going on in Silicon Valley is the reporter on that story, Erin Griffith, who is a reporter for the New York Times. So, Erin, thanks a lot for being with us. There is a saying in Silicon Valley about failing fast, and implicit was that, companies started and went away, and that was a part of the normal churn. How different are these failures from that traditional churn?
Well, the biggest difference is there has been so much money sloshing around in Silicon Valley for the last decade that companies that may have failed fast in the past are now taking a lot longer to figure out perhaps their business model doesn't work because they have so much more money available to burn, and they have had for the last decade. Venture capital, which is the riskiest asset class out there, has expanded by eightfold over the last decade. So tons of money has poured into high growth tech startups, and that has allowed a lot of them to, get very large. More than 1,000 of them are quote unquote unicorns that are worth $1 billion or more, and that's up from just a few dozen a decade ago.
So these startup closures that are taking place now because of high interest rates, were they inevitable or preventable? In other words, were closures sped up by interest rates, but the companies were probably going to fail anyway? Or are stable companies that would normally have weathered things failing because it's harder to borrow?
I think what you're seeing is sort of a confluence of factors. I think the biggest thing is that low interest rates push investors to take more risks. And so that is what has, propelled them into the venture capital asset class and into high growth tech startups. And now that it's easier to make a little bit more money, in other ways, the risk is off, so to speak. And so it's a lot harder for these tech companies to raise money for venture capitalists. A lot of investors are getting burned and deciding, actually, I don't want to be in tech startups anymore. I'm going to kind of lick my wounds and back away. And so what we're seeing is a lot of companies just kind of hitting the end of the road.
Hitting the end of the road in terms of having available funding, because those funders are going off to make their money somewhere else because you can get a better rate of return.
Yeah, and even some companies that have a viable business, but they haven't quite turned a profit yet, and they're renegotiating their debt and they're struggling to find a buyer. And I've seen some instances of companies that had buyers lined up that just kind of backed off because right now everyone is kind of trying to avoid risk, essentially, and so that's meaning a lot of companies are running out of options.
What happens to the entrepreneurs and the employees who were with these great companies and now no longer are? What's happening with them in the job market and the kind of world of Silicon Valley?
It's a tough job market right now in tech. You're seeing examples of startup employees who have been laid off from multiple companies over the last couple of years, or they go to one company that shuts down. And they find another job and that company also shuts down. It's a very difficult time right now, but Silicon Valley is inherently optimistic. And so a lot of these founders that are having to close their doors are already working on their next project or are, thinking about how they can revive this idea in a different way. So it's kind of the circle of life out here a little bit.
That's right. There's always a next new thing. Erin Griffith, reporter for the New York Times. Thanks so much for being with us.
Thanks for having me.